So today I want to touch on a topic that I feel is quite controversial. Many traders argue, that technical is better, and some will argue that fundamental is better. So how do you know which one um, is better and which one is right for you? So today that will be the topic of discussion. So let's get into it. So I think I'll begin by mentioning that I used to work for a marketing agency that promoted and got clients for various brokers. So in other words, we acted as the sales department, but also we needed to actually understand what is transpiring on the markets, what is affecting the markets, and a lot of what we've learned was through first-hand experience. So we got a good understanding of what investors were looking for, what they were focusing on, and which factors were actually affecting the market. So coming into this career prior, um, I would say that I was primarily only focused on technical trading. I was not really concerned with fundamentals at all. Then it was mainly because I didn't understand um, fundamentals as well as I thought I did. So I understood it in terms of what were the driving factors, but I never really relied on fundamentals towards my trading. But over the years, and especially during that time, I have discovered actually what truly impacts the market. And you see a lot of YouTubers, a lot of even off YouTube, even TikTokers, um, on socials. They will advertise, or they touch on topics as if those are really the driving factors of the market. I would sometimes listen to them, and people pay attention to them just because they have a lot of followers, etc. Or they may be successful with their trades. But when you actually notice, let's say, a specific market event, and you witness firsthand how that impacts the market, that gives more of a clear understanding and a picture of the driving forces behind what is happening on the charts. So I just wanted to clear the air so that there's no confusion, um, because people are going to tell you, what, indicators are really important, or indicators are not really that important. It's better to do naked charts. It's better to focus on fair value gaps. No, order blocks is better. These are the type of discussions that people tend to have. And then when they enter the trade and they're like, oh, I don't understand. It's giving me, a sell signal based on my technical analysis. Or they will watch or you get the fundamental traders, and they have the same experience where they're like, you know what, I entered this trade, based on this news event that occurred. Why is the market moving against me? So understanding why these things are happening, why price is behaving the way it is, what is driving price, is very important. And I like to think of it um, as a physics, in the physics format, right? That's how I like to view the markets. So what I mean by that is, I try and imagine that the resistance level, that's sort of a ceiling, the support levels is sort of um, the floor. So it's like a floor and ceiling type of approach, and the market is basically showing the shadow of a bouncing ball. So it bounces, up and down like that. So what I mean by that is the market is always heading, let's say, up, but it's not going to immediately, push all the way up. It's going to move with a rhythm. Do you understand? So even if um, news comes out which drives, let's say, the euro USD, since we're on this chart, let's say news comes out that drives the euro USD up, it can't progress up without there being, a key driver. And I like to think of it like, as I said, with physics, with with a bouncing ball, but also with cause and effect. So think of it like this: if fundamentals, right, they are the cause of the market, and technicals, they are the effects of the markets that you are seeing. So the main driving factor behind the market is the fundamentals. To put it to put it broadly. So therefore, when you are trading, following your economic calendar is not the only source of fundamental analysis. I mean, that provides data, yes, but um, there's many other things that um, we should be focusing on, that people are completely ignoring when it comes to trading. So what I mean by that is, they're not paying attention to how geopolitical factors, for example, are having an impact on the market. How the war in Iran, or the conflict between Palestine, the genocide taking place there, they're not particularly paying attention to how that impacts the markets. And when it comes to those sort of things, especially in the Middle East, investors will focus on OPEC, on especially in the Middle East, they will focus on oil prices that could be affected. Um, and then I remember even when the oil prices would go up on the charts, give it 2 weeks or so, and we'll actually start to see oil price increases occurring here in South Africa. So oil prices on the market, did have a real impact in our day-to-day living. Um, if you look in America, for example, and you're looking at um, the demand coming out for natural gas in America and in Europe, when there was that whole the start of the war in Ukraine, it had a impact, especially when those pipelines got blocked. It had a significant impact on the price of oil. It had a significant impact on natural gas as well, because people use natural gas, especially in the winter, to heat up their homes. And the strongest demand comes out of Europe, comes especially out of the United States. So what you're seeing on the chart, it's not doing anything to drive the market, because it says nothing about the core economic principle, which no one ever discusses, which is supply and demand. That is what is important. That really shows us, the long-term movement. So coming back to Euro USD, this is what I mean when I say long-term movement. This right here, these are the short-term movements. The market's not immediately going to move in a straight direction all the time. Sometimes it does happen, you know, but you need to be able to look at the chart and interpret it in terms of supply and demand, firstly, before you look at any other factors, before you look at indicators or trading methods, or anything like that. You need to understand what are the driving forces behind this movement taking place. It doesn't the market doesn't move um, involuntarily. It moves for a reason. So coming back to supply and demand, we need to understand what are we talking about. And if I can put it in very simple terms, before I get into the definition of supply and demand, when you're looking at the economy or the market, you always want to consider, what Very simple question: is this something good or is it something bad? Is it negative or is it positive for the asset or the symbol that I or the ticker that I'm trading? Like if Trump rest, if Trump restricts, um, let's say, supplying China with soybeans, right? How does that affect the demand and the supply of soybeans? So you need to investigate and you need to understand, does how does the news affect your asset that you are trading? And when I say asset, I'm obviously mean the financial asset that you are focused on. And the thing is also, with fundamental analysis. Apologies, let me just there we go. Also with fundamental analysis, what you need to understand is that you get different categories, right, um, of commodities. So when we're specifically looking at commodities, we're asking ourselves the question: is this a metal? Is it a grain? Is it energy? You understand? That is what we are looking at. And when it comes to, let's say, countries, we simply asking the question, well, actually, you need to do your homework and understand who is the number one, for example, distributor of soybeans. You know, who is the number one purchaser of soybeans? So on the one hand, you have an exchange taking place. If I open a shop, I'm going to be selling a product, and I'm going to have a customer that's going to be receiving it. So all the market is like a large scale version of that transaction that's taking place. So you always have the larger purchaser and the larger seller, within every sector, within gold, within oil. As I made the example, there's the number one purchaser of natural gas is coming out of Europe. It's coming out of USA. You know, um, but also you need to understand who is the larger seller. And coming out of Europe, that is where we tend to see the larger exports, especially the impact with Russia and Ukraine. Russia is also one of the leading distributors of natural gas. So when those pipelines got squeezed, it obviously impacted things. We saw the ruble, the Russian ruble, before it got taken off the market. It was spiking on that chart. Because of that political conflict because of that war that was taking place between Russia and Ukraine. So that was driving the market. It was not a technical chart to say, oh, it broke this level and it retested this level. That is basically you're interpreting the market based on the effect and not on the cause. So it's not a true reflection of the driving forces. And coming back to supply and demand, we can see here that what is important to pay attention to is the amount of demand, the amount of buyers to purchase at a given price, right? And the opposite is obviously true when we're looking at the supply side of things. So we need to ask ourselves when we're trading, we need to ask ourselves the question: is it good for the economy? Is it bad for the economy? And the next question we need to investigate is: who are the parties involved that is being affected the most? Who is being impacted the most out of this exchange, out of this event? So when you were looking at oil supply being restricted, obviously the number one thing that is going to be affected on the charts is the oil. You know, um, if there is a drought as well in a certain region, and let's just say they're supplying wheat, for example, um, or any crop, whatever, and there's a drought, that is obviously going to have a significant impact on the causing to be a lower demand, and people will then be willing to pay higher for the supply of that good, of that grain, of that oil, whatever that may be, right? So especially when we look at things such as what took place on Bitcoin, we saw that it had an impact when that 9 billion got traded off by that Satoshi whale. We saw how that impacted the market, right? Immediately when he sold, it caused the price to go down. But why did it go up after that? Why didn't it continue to go further down? How do we interpret it? And if we look at it, we saw an increase in the supply, but there was no real impact, right? Uh, and the reason for that is we weren't truly seeing an increase in supply, because that transaction that took place, it wasn't as if when he sold, it pumped more Bitcoin into the market. That's not what happened, right? What happened was it was a direct exchange that took place, a direct transaction that took place from one party to another. So the supply, in other words, was not actually affected. But initially, when that news came out, there wasn't really as much details on it as yet. So we saw people just immediately reacting to it, immediately selling off the Bitcoin. And then when the details of the transaction actually came out, and people were more informed about what was taking place, that it was a direct transaction from one party to another, that is when investors got back in on Bitcoin. That is why we saw it continue to go up. It could have dropped further, but it didn't. It went further up initially after that sell-off that took place over the weekend. So just to get into the definition here of what is fundamental analysis, what is technical analysis. So when you're talking fundamentals, we're considering obviously economic factors. Broadly, we refer to it as fundamentals. And yeah, I mean, when it comes to stocks, this is what we focused on, financial statements. But we need to focus on macroeconomic factors. So not the financial statement coming out of one country. We need to look at the financial statement coming out, for example, out of all tech companies. All right, let's say we're investing on the Nasdaq. We're not focused only on Apple, how well they did on the earning report, or when PayPal is giving out dividends. We're not only focused on those things, right? We need to be focused on the entire sector as a whole. Also, we need to look at who is the strongest, who's leading the pack in the technology sector. Like, those are the ones that we typically want to target when we trading the Nasdaq. A lot of traders will purely focus on the technicals, and they, like I mentioned, they don't really understand at all what is truly driving this market, because they'll only focus on the chart. So these guys over here, the fundamental analysis, they understand the direction that the market's supposed to head towards long term. These guys don't truly understand that. They might interpret it from a chart, but they don't truly understand. These guys truly understand what is taking place on the market. These guys, however, will be able to tell you when you need to get in on the market and when you need to get out of the market. So from that perspective, technical analysis is useful, and also to understand which phase um, in the market cycle is the market currently. You can't determine that with fundamental analysis. You can only determine that with technical analysis. So both are important in playing a role when you are looking to trade. But for an investor, this is probably more important than this. You know, if you're somebody that's truly investing in a stock and you're owning shares, this would be your number one thing that you would look at. So as I was saying, enter and exit. So when you're a trader, traders typically focus on the short-term approach. Doesn't matter if it's a week is still very short. It's not like we're looking to hold a particular stock or something that we're trading. We're not looking to hold it for, you know, for years at a time. Whereas these guys care more about that. So as you can see, this it's more trading focused, and this is more investing focused. So we are looking at from a fundamental point. When we're looking at companies specifically, we would be focused on things like splits, like dividend payouts, like earning reports, um, evaluations, financial statements. We would be focused on sales announcements, for example, or new product announcements. That is what we would be focused on when it comes to fundamentals when we're looking at companies. So whereas technical analysis only looks backwards. So in other words, they look at where the market is today, and they look back. In other words, like from the current, from today to the past, from today to the past. But with fundamental analysis, you know, fundamental analyzers typically tend to have a broader perspective of the markets, because we're not looking at the market for today only. We're looking at the market, how it occurred in the past, how it occurred in the future. So now, which one is better, to be a technical, to focus on your technical skills or your fundamental skills? And in all truth, you know, it's kind of like that approach of being a jack of all trades. So it's very important that you understand both, because each has its different use cases when approaching the market. So as I've mentioned earlier, there's two ways you can really, when you're analyzing things from the fundamental perspective, there's two real things that you are looking at. So you're looking at the specific industry, like you're doing a bottom-up analysis and a top-down analysis. So you're looking at the specific industry as a whole, okay? So when we, for example, we have the auto industry, that might be the industry that we focus on. Then we have grains as an industry as a whole. We have technology as an industry as a whole. So we can obviously get more specific. Like if you're looking at technology, we're only looking at the cell phone market, right? But when we're looking at the industry as a whole, so let's take for example Apple, right? Apple produces phones, PCs, etc. So when you're talking a specific industry, we're only looking at the phones itself. When we're looking at specific industry, we could, for example, only be focused on iPhone consumers. We don't really care about other consumers, you know, Android consumers. So we're looking only at iOS consumers within the cell phone industry, within the technology sector, okay? And we're looking at how that has an overall impact on the economy in terms of semiconductors, in terms of, let's say, demand for, I don't know, for phone screens, for batteries, you know, whatever it may be, right? this is when we're looking at the overall economy as a whole. We're kind of taking into account all those small tiny factors, how that has a impact on the larger scale of things. So we can do it two ways. We can either look at the overall economy, uh, 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 we could do it specific industry sector, overall economy, we could do it that way, or we could look at it the other way around, reversed. So it really does not matter. This is just a preference, um, on to each one their own. You might prefer to start with the specific uh, company first, or the specific economy first. It does not matter how you analyze it, but you need to obviously have an approach of looking at things from a macro scale to a micro, or from a micro to a macro. And then, just to mention, I am actually doing this. So looking at pictures that are freely available on the internet. Okay, so they're not copyrighted or anything like that. I'm specifically just showing you guys, so you can have a broader understanding. So the next thing we want to look at is, we want to understand, what is the benefits out of coming out of fundamental analysis, right? So what I like about reading up on the news events, etc., is that it allows me to understand what is currently taking place in the world today. Which companies should I be focused on? It gives me an overall understanding of the health of the economies of the world. So that is why I tend to lean towards more firstly understanding fundamental analysis, and then making technical decisions after understanding um, those factors. So there's no profit guarantee, because with anything, with any investments, but this does give you a determine of long-term trends. It does tell you in the long run where is the market looking to head towards. So knowing this allows you to understand, are you in a pullback, or are you following the trend? Because you're going to have reversal traders, you're going to have people that prefer to trade continuations. Never mind if you're a swing trader or day trader, like that is irrelevant actually, right? What really matters is, um, are you looking at a short term trend within the time frame? So if you're looking at a 1 hour, are you looking at the short-term movements, the short pullbacks, or are you trading with the greater long-term movement? And from a trader's perspective, it's always better to try and focus on the direction that the market is actually heading, right? So long-term trends tends to matter a lot more, because let's say you can enter a trade and maybe you entered at the wrong time. You go out for the day, you come back, and you could be in profit if you were focused on the long-term trade. But if you focused on the short-term trade, then you might run into an issue, because you might see, oh, this market is busy going down, and you enter that trade in a sell, and the next thing you know, you come back to the charts 5 hours later, and the market is moving completely against you. So to avoid that, it's very important to always understand the long-term direction of the market. People typically invest in the based on fundamental analysis, as I've explained before. It's more long-term investments, whereas traders in general tend to look at technicals only to make a decision. So when there's a lot of uncertainty taking place on the market, it helps you, prevent you from panicking, because oh, if this market is, you're not asking yourself like, hey, I was now entering this trade on a buy, and suddenly it's moving against me. What is happening? Should I hold the trade and hope that it improves, or should I be getting out of this trade? Should I be swapping my position around? Should I be hedging? So you're going to have 10,000 voices, going off in your head, but it's important to breathe and important to understand what is the driving factors behind the market, because you need to understand, as I've said, why is that market doing that. Okay, it's real world events that causes that behaviors, and sometimes we might not even immediately know the answer as to why something is happening. We're human, sometimes we miss things, but afterwards, I promise you, like, the reason as to why that movement took place, that justifies and you to understand that, it usually does come out. It usually does. If you look for the information, you'll probably find the exact reason why that movement took place, and it usually corresponds with the time of that news event being released as well. So when I say news event, I should also mention I'm also considering news articles, because those aren't usually on the calendar, but they do appear on the market. So it's important that you actually pay attention to current news as well that is being released. Then from a technical side, I need you to understand that the market tends to move, as I've mentioned, like this is the long-term trend, for example, if we're looking at this, and these would be the short-term trends, right? Short-term movements. So the tracements, the retracements, the corrections, that would be the short-term trends. So um, normally what you need to understand is that the market moves in waves, like kind of like that, like a figure, like a half a figure eight, right? That's typically how the market tends to move. And if you look at it here, it's doing exactly that. Do you understand? So this is a very straightforward interpretation of it going from point A, B, C, D, you know. But also what you need to understand is, if you look at this, you have a higher low, then you have a higher low, and you have a higher low, right? And then you have a higher high, higher high, higher high, lower high. So when you are looking for sells, and you're in an uptrend, right? This is obviously a bullish trend that we're looking at here. We know there's going to be higher highs, higher highs, higher highs. What would be an indication of a sell would be a lower high. So if this high is lower than the one previous to it, we would know to sell, right? But the opposite is also true when you're looking for buys. Okay, so obviously this picture would be flipped entirely, and we would have, for example, a higher low that is higher than the previous low. Then we would enter on that higher low. Okay, I hope that clear makes it simple to understand if you're looking at technical analysis. So never mind indicators or fair value gaps or volume profiles. This is important for you to understand when it comes to technicals in the very basic, and from a very basic understanding. Okay, this is the concept that you guys really need to understand, because this is the safest entry. If you're looking for sales, this would be the safest entry to trade the market long term. This would help you better in terms of catching a reversal. This is what you look at. Okay, it's the safer trade, and I mean, you can even set your stop loss there into here. Boom, Bob's your uncle. um, as long as you have consistency with following this method, there's no way you can lose money on the market, if all you're doing is focus on technique. Because even if you were to connect, let's say, a trend line over here, you would notice that it broke there, but understanding higher highs and higher lows allows you to enter here. Especially when you consider support and resistance, you might see in the past that this was a key resistance level, you know, that occurred somewhere in the past here, and then you can even see that there was a rejection and then enter your sell here. All right, so this is what I was talking about when I was mentioning the market cycle. So we always have accumulation phase and a distribution phase. What that simply means is like accumulation would be the bottom, distribution would be on top. They also refer to it as the markup phase and the markdown phase, the expansion phase, the recession phase. Doesn't matter, like what's important is that you understand it, that you understand at which point is the market in. So when you're looking at the chart, I typically go historically. So let me show you what I'm interested in is understanding this, seeing the movement. So if it's accumulation, distribution, you understand. So we have accumulation and then we have distribution. So that is what I would look at, is understanding that that cycle, that wave, visually seeing the wave on the chart. And the best way to see that wave is to simply do this. So notice you don't need indicators to see this, but you can clearly see it went up, down, up, down, up. What is naturally the next direction? Down. And what is the next direction? So obviously I missed the cells here. What should I be looking at? What should I be focused on as a trader? Is up. And what am I looking at? Well, I'm looking, is there a higher high or higher low that is taking place here? So currently we can see this is a lower high that took place here. Okay, we don't care about the wicks, we care about the body. You know, so we know that it broke that level. It's likely that it can go lower, you know, because it formed a lower high. But remember, what is next? It needs to form that higher low. I mean that lower high, right? That would be the confirmation. Right now we haven't really gotten, like here we've got a lower high that formed, and then we have a low, sorry, here we have a lower high that formed, okay, and here we have a lower low. So this would be the entry. That is what I was talking about when I was talking about over here, the lower high. You understand? That would be the ideal entry. So have a look at this one, and then over here you can see that it's the same, it's a lower high. Then we have the support level over here. It got broken, boom. So do you see that? Even if I draw a trend line, it formed that lower low, broke this level, and then it went all the way lower. So people will talk about, you know, support, resistance, levels. Yes, they are important, and trend lines are important. And we can clearly see that the market did break, right? But we would have known to get in early because of the lower high that formed on the market for a sell. And for a buy, you're looking at a higher low, if that makes sense. So here's another picture, and I'm sure a lot of you guys experience this on the market, where you'll notice that the chart moved up, and then especially here, if you were to look at, for example, the RSI, you might actually encounter that it was overbought, and that is why it sold. But when you're considering something that is overbought or oversold, regardless what indicator you're looking at, you need to ask yourself, is this a reversal? And the only way you're going to really know is with the lower high or the higher low. You understand? Um, that's the only way you're gonna really know whether you should be buying or selling in that instance, is by checking those highs and lows. Your indicator isn't going to help you. That fair value gap and order blocks, all of those things that a lot of people are promoting, that's really not the number one thing that you should be paying attention to, right? A lot of professional traders focus on very basic things: the lower highs, the higher lows, the trend line that breaks. That's the number one things that we focus on. And even if you look here, you can see the same thing took place. When was this the best time to sell? The safest place to sell would have been here. You don't need to get in here. I mean, if you pick it up that this is a key resistance level and it's over bought already, then you would know, okay, I need to sell here, right? But the safest entry that confirms it, that confirms the trade, would be over here with the lower high. You understand? So now once we go here, so I'm not actually using this account. As you can see, I'm not actually trading on this account at the moment, but I want to actually show you guys. Okay, so here we can see I've drawn it up nicely. This is the accumulation, the distribution phase, accumulation phase, distribution phase. Do you understand? So typically we need to consider, is this the peak or the trough, right? Is it the peak or the trough? The trough, right? And if we look at this, we have the trough that took place here, and this is the peak, right? And then here we have a distribution, right? So what is going to be next is the trough phase. So if we witness the trough phase taking place here, we would then know that we need to look for a buy there on that next year. So we would typically wait for a nice pullback to occur. Once a pullback occurs, we would draw a trend line, and then we wait for the breakout of that trend line, and we in, boom, for a buy. Easy. So when you're trading, you always want to be looking at these clear movements that is taking place on the market. Can you see that? So you're also going to have these tiny accumulation and distributions taking place as well. But what's important is to focus on this first. Do you understand? Focus on this first. Don't focus on these ones. These are what all traders focus on, right? Then it's a continuation or reversals, but focus on these, on the accumulation and distribution, the peak and the trough. Understand which where you are in the market. Understand what is going to occur next. Understand what you need to be looking at. Because if you look here, you could have gotten in once you spotted the lower high. And here, you could have gotten in right here. Once you identified that, hey, there's going to be a pullback, I'm waiting for what? The trough, right? I'm waiting for the market essentially to turn and give me a higher low. Then next, I want to understand where is that market going to head towards. So I can go insert Fibonacci retracement, right? Let's say I'm entering this one over here. Then I need to draw my Fibonacci. So typically, let's say you wanted to catch this movement, you would have to draw it from here till there, and it will tell you exactly does it break here, or does it reject? Do you understand? So once you see a rejection taking place, you know the next point is going to be over here. But if you see it breaks on it bounces off support here, then obviously the next point is it's going to retest this, and possibly it could break to the next level. So that's how you can also interpret the Fibonacci, to identify how long you want to get in for a trade, and where the potential movements, the potential next level is on the market. But also you could use a volume profile that will actually help you determine where's the main point that you should be looking. So if I drew a volume profile, let's say between this point, let's say I entered here between this point and this point, I would have seen that this is the main direction of the market. So now we are here, right? Now the question is, where is the next point of the market? Here. So we can just do this, boom, 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 using volume profile. We know that the market has to come back up around about to this level. Easy. So we now know that it might be too early to do this, but we know that we need to draw a trend line. Yeah, we need to wait for the trough to take place. So possibly, if I can just delete this, just want to clear it up a bit. Oh, there we go. So this is the main point that needs to be broken, and then it's going to head over there. But this is obviously quite high. Let me just delete this as well, probably. Indicator list, volume profile, delete. Okay, we've zoomed out. So we can clearly see that this is a lower high that has formed. So we might see a lower high and then a higher low. I mean, then another lower high, and then we'll know we're in for a sell. And obviously we made this so it's a lot easier to identify where is your resistance levels. Okay, this having this in place allows you to see, it's as if you have a trend line. So that is why we created this system. If I can just draw from this point to that point, then you can actually see. So this acts as a trend line, as a natural trend line, without you needing to draw a trend line. You can actually see once it breaks, you will automatically have this occur here with especially this with the parabolic saw. Remember the parabolic saw that we are using, it's not your typical parabolic saw. It is available, in the description if you're looking to make use of this parabolic saw, but this gives a clear indication to us that the trend has been broken. You understand? And once we move out, we can actually see that there is support occurring here. So it's quite possible that once it reaches this point, do we see a bounce back of that support? Because right now this is a strong, extremely strong resistance zone, right? Shapes, here we go. So as you can see, there's two lines here. So I haven't made it that it colors in, but this is the a strong resistance zone over here. Okay, and typically it gives us an indication that the market could be heading much lower, but at the same point time, this year, right, let me just do it this again, shapes this two between those points here, this is strong, um, this is strong support as well. So we are expecting that we could be seeing some of this behavior. Do you understand? So bounce off, up and down. But we can't say for certain until, you know, these news events, there's a news events happening. There's a consumer price index, the gross domestic product. So as you can see, the dashboard indicator automatically displays this, so you can see upcoming news events. So you know that if you not somebody that is looking to trade in news events, maybe you want to be cautious, you would wait to trade until this news event is over. So what dashboard is essentially doing is it's combining the factors of fundamentals with your technicals. It's allowing um, you to stay informed much easier, because even though you may be not reading news articles, at least you are seeing what's being displayed is the news events themselves, right? Um, you're seeing what is upcoming, what time it's happening, what is it affecting, is it a 3 bull 2 bull event that is taking place, the date that is taking place. So all of that is being displayed over here. Okay, I hope that helps you guys make better trading decisions, and we might do a tutorial in the future, but for now I just wanted you to understand what is truly driving the markets. So it's understanding that behavior, those highs, those lows, that the market cycle, the waves, in other words, because that's really going to allow you to understand whether you should be buying or selling. For instance, if I'm looking at this USD JPY, I would be typically focused on a sell over here, right? So line, straight line, this is where I can actually um, draw the trend line. You understand? So once I see, it's probably gonna, and here's also resistance. Can you see that? So I know that this is a resistance. I would be looking for a lower high to form here, and once that is confirmed, I would then be looking to sell on USD JPY. So moving forward, we will obviously try to keep you guys updated with what news events is taking place on the market. We would also be focused on looking at different charts and their behavior. You understand? Because we don't want to make a decision that's purely technical based, nor do we want to make a decision that is purely fundamental based. You know, the ideal thing to do is to make a decision based on understanding both sides of the coin, because that is what's going to lead us to make better informed trading decisions. I mean, pivot levels are cool and all, but simply understanding the market cycle allows you to, and the support and resistance allows you to determine on your own with the naked eye on a naked chart exactly where is the next point of interest that the market is focused on. Because I know that this movement is the most important right here. This up, down, up, and then down. If it forms a lower high here, if it reverses here, I would know then that I can get in for a nice long sell. You understand? But if it breaks beyond this point, I'm probably going to be trading a retracement movement. A long one, but it would essentially be a retracement taking place. if it does break above this point. It's quite unlikely since it is a strong resistance point, but this is the markets we're talking about. So we're not going to be entering on this. This would be considered a bad entry because the market's already high. So try and avoid this. You want to typically enter here at the throw. And how do you know when you should be looking to enter at the throw? Is you look at here, you look at this. So insert lines horizontal. So I would be focused on this level being broken, right? If I'm looking at this, let's say I got the pullback here, I'm focused on this level here, and I see it broke past. Okay, now it's sitting on that support over there. Okay, does it come up and break the previous level of support here? If it does that here, I would know, then I would need to get in for a buy over there. I hope that makes sense. I hope that gives you guys a clearer perspective and understanding of what moves the markets. um, I hope it helps you make better informed trading decisions as well. So I know I didn't really go into too much detail, but I wanted you guys just to understand the gist of it, right? My dad always says it's not important that you memorize, it's important that you understand. And typically, it's far easier to grasp something when you simplify the concept, and you know exactly what you should be looking at and focus on the market. Okay. um Even, but one thing I need to mention to you is that a lower high does not necessarily mean um a reversal, not in all instances. Okay, because here we can see there's a lower high that formed, right? And we would have gotten this trade here, but once we saw that the market moved up, right, start moving up, we would need to close this trade and then look for a break over here and then enter. And I mean, if we look, just simply we follow this line over here, we can see that this was the resistance. This resistance became the new support. That is what took place here, and that is why we continued to go further up. So whenever we see the market will either accept a level or reject a level. So we saw that the market respected this level and rejected this point here, which then led to it becoming a support. So this is quite typical to actually occur on the market. So I'm actually glad that you can actually you can see it on this chart over here. It's a perfect example of that. So just be mindful of that. And there was obviously fundamental reasons driving price to be all the way up over here, right? And the key part of that also has to do with the market cycle, the phase of the market, the demand that took place here. So I hope that clarifies things. And yeah, feel free to hit the notification, to subscribe if you'd like. If you want to support what we do here, there is links in the description that will allow you to actually download the indicators which we have developed from the ground up. So everything that you see here, um, we have developed ourselves, right, in-house. So very simple put, we made everything color coded so you know exactly when you should be buying, when you should be selling. You know, it's to make things easier for you guys um, when it comes to your analysis. So we're looking to make it the lowest we can actually sell it for is $30. So we're going to be selling everything for $30 each. Obviously, pay for what you want, what you find useful. And as traders, we need to invest in tools that is going to help us bring in money. For example, you're typically going to be spending money on property because property is an asset. It's something that It's not going to depreciate. You're always going to be able to get use out of it. So spending money on some good indicators, that really makes a difference in your trading. At the end of the day, it's an asset. You're always going to have it, and always be able to make use of it. And hopefully it's an asset that will bring in more money for you, because it will enhance your experience when it comes to the markets. For example, usually in the past we would, well, even today, we would need to calculate the lot sizes manually. But if we look at for example, dashboard, which is oh, I'm at the wrong place. So if I click on dashboard over here, so um, you just click that and then it pops up. So always make sure that auto trading is enabled, because once it's disabled, you're not going to be able to do anything. So auto trading simply serves as an on and off switch for dashboard. It does the trade on your behalf, right? So I just want to clarify that. Then if you click on dashboard, you can click on the smiley face. You can see that you can actually decide this is 2% risk, 5%, 10%. So you can decide how much you want to risk when you trading the markets. You can also choose to only track the current charts trades, or take everything into account. So there's a lot that you guys have here that you guys can play around with, to kind of make it your own. Okay. But yeah, that's it for now. um if you guys want to support us, you can download the indicators that we're using. You can follow the channel as well, enable your notifications, since we are going to only cover things that have real world impact on the market. We're going to be covering news events. We're also going to be releasing signals as well. And then, you know what, also we do have our own website as well. So you guys can check that out as well. Okay. um, then we will be reopening our Telegram group. So with novice, we only focus on Forex. With professional, we focus on Forex commodities. um, and then with elite, we focus on everything here. um, Literally everything on the market, live charts, everything. This has nothing to do with the deposit. You're not sending us money or anything like that. It's just, you need to have a reasonable account size to work with. But we might change this. We considering, lowering the entry level, so that it's a lot more accessible to everybody. So feel free to follow the group when we do make that announcement of reopening um, Forex Signal Pros Telegram channel. We will be releasing every morning. We'll be releasing signals on there, and also, mentioning what you guys need to be focused on. So if you don't always have the time to watch the YouTube videos, um, you can simply, get notified via Telegram on what we focus on what is important for the day on the market. Where are the opportunities? So we'll obviously alert you guys as to where those opportunities are. All we ask is that if you want to participate, you need to have an affiliate account registered, and then we'll allow you into the Telegram group. So it is with the broker XM. Okay, and that Telegram group will be announced in future videos. We're not only going to be giving out signals, but we're also going to be looking back at the signals that were given and actually seeing how they performed. So a lot of YouTubers, what they do is they might release a signal and they might edit afterwards what they said, so it looks as if they gave a successful signal, but meanwhile they did not. Right? So they give a false representation of what actually took place. With us, with the signals, we're not going to do that. It's going to be raw. If we make losses, um, you guys will be able to see that. If you make profits, you guys will be able to see that. But in the past, we have tracked our signals, and we saw that there was quite a decent return when we were tracking it, because we hold ourselves accountable in terms of doing our level best to make sure that we accurately representing and letting you guys know of what's taking place on the market. And when we analyze, we try our best to make sure that we only focus on those things that are clear and not misinterpreted. So we'll typically even avoid um, trade giving out a signal when consolidation is taking place. Okay, we only, when we feel there's a high probability of the market heading in direction, that's the only time we will actually give out signals. So it's more quality over quantity. Some days you might only receive 2 signals, some days you might receive 5, some days 10, but we're not going to force feeding opportunities that we feel has some risk to it. Okay, because for us consistency is very important, especially myself when I'm looking at trading the markets. I typically don't like entering things that I have doubt in. So similarly, when it comes to the signals, we're going to be sending out signals that we feel are strong candidates for buys or for sells on the markets. Because at the end of the day, you guys are supporting us. You guys are looking obviously to get some return. Although we're not charging you directly for any services, we do ask that if you really truly want to support us, then sign up to the affiliate, join XM. I mean, you're going to be getting 100% deposit bonus, and as you trade, you're also accumulating points which you can later redeem as rewards. So that you guys don't need to redeposit money into the market. You can simply redeem those points that you earned and and trade with the credits that you are given, with the trading credits that you are given. And also there is promotions that take place as well, so you never run into withdrawal issues either. So it's a really good broker that really looks after you. That is why we decided to partner with him, because the customer care is great. From the supporting point, in terms of the fundamental news coming out of them is great. There's tons of support. Like once you browse a website, you'll actually realize that you don't need to be going on third-party websites or anything like that. You'll be able to see, yeah, you'll typically be able to see that there's, if I look at promotions, there's a lot of things that you guys can benefit from, as I've mentioned, when it comes to your rewards as you are trading. This is a broker that tends to give back, and there's a reason why consecutively they have won multiple awards in the past for being the most honest and transparent broker. So if I go over here, XM rewards, you'll be able to see that they are an award-winning broker. These are just some of the awards that they've won in 2025 that really showcases how amazing this broker is. And then on top of it, you've got all of these trading tools that actually does help you, right? So you can click on news and analysis or anything really. Obviously you won't get access now, but once you guys join, you'll actually be able to see all of these things open up to you, and it actually is pretty useful. I find it at least pretty useful when I'm using it to help me understand what is taking place on the market. So I hope that that has become useful for you guys as well. So click the link in the description if you would want to join XM, if you want to support us as well, um, and if you want to receive signals from us as well. That is a requirement, is that you are a XM member, okay? Since we're not obviously charging you guys anything, but if you want to support us, you can do it that way. So yeah, that's it for now. In future videos, we will obviously be looking to try and provide things which are truly beneficial to your trading journey. Take care.